welcome on board Saurabh Mukherjea and talk about what he's making of the market right now. Saurabh, hi, morning. Good to have you on the show. Where's your cricket jersey?
I think this is the Marcellus jersey. I think this is the best we can do. As the World Cup gets underway, we might move towards jerseys of various nationalities.
I'm sure. But, Saurabh, typically around such big events, you always look at the business of things as well, right? The business of
Yeah.
cricket, and considering this is such a mammoth entity, India is the solo host this time around, it's coming after a while. Any beneficiaries you think that in the near term could be good plays?
I think what's astonishing is the fact that in spite of the ticket prices, every ticket that I've heard of is gone. Not only are tickets gone, hotels are rammed, plane tickets are booked out, and I think this goes to show how wealthy a certain strata of Indian society has become. I would say not just the Indian upper middle class, but in general, in the big 10 cities of our country, levels of affluence and disposable income have reached close to first world levels, which is why you're seeing ticket prices which are comparable, I would say, to say a football World Cup held in the Western world. So, heartening to see this level of affluence in India's big cities.
Absolutely. And one has seen that affluence rub off on all the data points as well that we've been getting off late, be the property registrations, be the auto sales, all of it. You think this premiumization theme, Saurabh, is here to stay for a long? Because a faction of the market also believes that what you could bet on right now is the rural recovery because they are the ones which have underperformed for the last over a year or so.
I think there are three underlying drivers of wealth for, I call it the octopus class, right? Roughly a million super rich individuals. Three underlying drivers. Firstly, obviously the stock market, right? The stock market's up nearly 18, 19x in the last 20 years. Anybody who's invested serious sums of money in the stock market over the last 20 years is on a rocket propelled ship. Secondly, as the country networks, roads, airlines, broadband, the India stack, even small businesses who are competitive, small businesses in small town India are locking into the broader national economy. And it's very interesting that in our small and mid cap portfolios, some of the best companies are no longer in the big 4 or 5 metros, they're in the next 20, 30 cities. And the rise of an integrated national economy is driving an SME class. And the third aspect, I think, is the rise of what I call global capability centers. We have roughly 1,600 GCCs in India. These are companies and these are global companies, India offices, but this is also, say, a Google or a Microsoft's programming centers in Hyderabad and Bangalore. Our reckoning, Aisha, that this number is growing by 20% every year. Pretty much every day a GCC is opening up in India. That itself will create around 4 or 5 million jobs, affluent, high-income jobs. And this combination of the whole world's, not just IT services, but payroll, finance, marketing, audit, all of that work being done in India will create a deeper layer of affluence in Bombay, Bangalore, Hyderabad, Gurgaon, but also increasingly cities like Coimbatore, Nashik, Indore. These cities are becoming big hubs for global work. So three massive drivers of affluence for premium India. The lower income strata is a different story. I think the FMCG company struggles you were highlighting a few minutes ago tells that part of India is struggling. But upper middle class India, octopus India, as I call it, is absolutely booming.
Oh, yes, indeed. And even with the kind of inflated prices that we've seen for hotels, airlines, etc., not just for the World Cup, but people are really willing to shell it out for those great experiences. Which brings me, Saurabh, to just get in your quick take as well as to how you're looking at, say the food aggregator space or the entire consumption sector really getting a big pickup, of course, from a big event like this and, sort of sustaining that momentum. Do you think that that is looking achievable? Because, say, in 2019, it was the likes of a Jubilant that really took the lead when it came to a big event like the World Cup. But now it seems to be a lot of other players as well that are dominating this space.
So in the food aggregator space, I agree with you that there'll be a volume uptake is all but inevitable given the scale of the World Cup. But the challenge I think in food aggregation and generally in much of the digital space in India is bargaining power, is competitive advantages and the ability to translate volumes into profits and cash flows. I think that remains a struggle food aggregators generally and the digital online space in our country. Where we think the biggest profits will be made is supplying the critical inputs which go into the food industry. So, for example, in our small and in our mid cap portfolios, Little Champs and Rising Giants, we are big shareholders in Fine Organics. Fine Organics supplies the emulsifiers, a significant number of the additives which go into biscuits and snacks that we have on a day-to-day basis. It goes into our fizzy drinks that we have on a day-to-day basis. That's where the big kickers will come. Companies which have established almost dominant hammerlock into the raw materials which go into our foods. And if you see Fine Organics' return on capital, it's around the 35% mark, suggesting deep dominance of some of the essential inputs which go into the stuff that we eat on a day-to-day basis, our snacks and our fizzy drinks.
Okay, Saurabh, what about the entire chemical space and even pharma for that matter, the CDMO manufacturers, etc.? Which are the stocks you like there?
So I think what's been very interesting, this is the first time I've seen this in a long time. May, June, July, August, the Chinese really came after the Indian pharma, spec chem, and agrochem industry. I haven't seen China come at India this aggressively since COVID. The RMB was devalued. The Chinese government gave subsidies. The Chinese government gave profit guarantees to Chinese exporters who were willing to take on the Indians and push through price cuts. So our reckoning is from May through to August, China pushed through basically a 25% price cut on pharma, agrochem, and spec chem. September is when the Chinese have thrown in the towel from what we can see. So I think the second quarter results for the spec chem, agrochem, and the pharma industries will be affected by the Chinese price cuts. But September, the month of September, we've seen prices bottoming out. And I'm hopeful that when both the pharma companies and the spec chem, agrochem companies announce their results, they'll give us some sense as to why the Chinese threw in the towel in September and what we can expect to see on the prices front. My hope is the prices have bottomed out, and therefore I think the second half of the year will look good for many of our larger holdings. For example, we are large shareholders in Divi's Lab, in Alkyl Amines, in GMM Pfaudler, in Poshak, and we're hoping the second half of the year will bring good news as the price action seems to have bottomed out. Quick disclaimer, I am a shareholder in these companies through Marcellus PMS, so are my parents, and so are thousands of our clients.
Saurabh, just a follow-up on Divi's Lab, because you own that, and there was a initiating note that came in from Bernstein this morning with an underperformed rating and 18 to 20% downside. They are worried about the fact that Divi's is in these segments which is actually seeing slower growth versus rest of the companies as well. The valuation is at the premium versus the rest of the peers, and the fact that the approval rate for large volume drugs has been a bit constrained. Your view?
So last year, when Divi's halved through last year, in January of this year, we quadrupled our position in Divi's. And we did so broadly for three reasons. First reason was we could see in the newspapers that China and America were going at each other. China accounts for 70-80% of the world's production of APIs. India accounts for just 10%. And our point of view remains that market share will shift from China to India. We're seeing that happen. We reckon Divi's is the biggest beneficiary of the big pharma American companies shifting their supply chains away from China towards India. Second thing was Divi's third plant went on stream last year in Kakinada. We had some visibility basis our primary data research talking to the big pharma companies in America. We believed then and believe now that the Kakinada plant will fill up rather quickly with American demand from say the Pfizers, the Mercks, and the Glaxos of the world. We've got good visibility that the Kakinada plant is indeed filling up with contrast media production. And the third piece is the sheer amount of dominance Divi's have. We have seen no other Indian firm in API be as comprehensive and as competent in identifying APIs that they can dominate and then backward integrate production so that they become the largest and the lowest cost producer in the world. Murli Divi and team have done an outstanding job in that regard. In the 20 years the firm has been listed, and we have good reason to believe that will carry on. So we quadrupled the position back in January. So far, it looks like it was a good move, but hey, let's see what the second half of the year brings for us.
Divi is a quadrupled the position, right? Just repeating what you said, Saurabh, reiterating.
Yeah. We quadrupled our position in Divi in January after the stock had halved through 2022.
Okay,
That's quite
good to know,
interesting.
yeah.
I'm curious to know what are the other positions that you've taken? Any concentrated bets in the last month or so?
As we've made public in our small cap portfolio, Little Champs, we built a position in RHI Magnesita. I think we perhaps discussed that once before on your channel. Again, in Little Champs, we've taken a significant position in Rainbow Hospitals. It's a Hyderabad-based maternity and pediatric hospital chain, the most profitable hospital chain in India by our view, and growing rapidly. There's more action coming. There are more Little Champs that are in the pipeline. So both in our mid cap and in our small cap portfolios, we're building some concentrated positions in other interesting companies who we think will do well. Would do well on the back of, say, three broad themes. South India is booming. The whole China plus one piece is pumping up the South Indian economy. Plus, the outsourcing theme is also helping the South Indian economy go great guns. Secondly, women. Women are now the big drivers of the Indian economy. Women are earning more than men, we believe. Women have more money in the bank than men, and increasingly the Indian economy's employment prospects are tilted towards women. And the third piece is the premium consumption, the octopus theme, and the fact that Birkenstock footwear sales are growing 20x faster than Relaxo footwear sales. The fact that Royal Enfield motorcycles are growing twice as fast as ordinary motorcycles.
Saurabh, if I may add a little bit of a cricket twist to it, which out of a lot of these companies that you've flagged off, or stocks that you've flagged off, do you think could replicate a Yuvraj Singh-like performance that we saw, the dream run in 2011 in the World Cup? If you had to pick out just one.
So look, amongst our largest holdings in our biggest portfolio, consistent compounders, we are still loaded up heavily on HDFC Bank. I've heard lots of stories about HDFC Bank and HDFC Limited. I think many of them are stories built on pure fiction. As HDFC Bank's pre-close update suggests, this bank is growing liabilities at 30%, which is quite unbelievable. In a difficult environment to pick up liabilities, HDFC Bank has picked up 30% growth in liabilities. Remember, the first 3 months of this calendar, a quarter of India's liabilities came to HDFC Bank. So we believe we remain large holders there. And we think the current environment bodes well for the bank. Plus, the integration we think will go far better than many other people out there expect it to go.
The other thing, considering sort of you do map global data points as well, wanted to understand what's the sort of silly point for investors that they must be cautioned of?
I think the area which worries us a little bit is this whole PSU Capex recovery. Because our reckoning is that the fisc is overstretched. Remember, the budget deficit today is higher than what it was before COVID, and overall tax collections. So as GST collections are in decent shape, corporate tax collections are in decent shape. Overall tax collections are not growing as fast as I think were budgeted. Remember, the budget expects 14% growth in tax collections. I think that'll be difficult to come through. So my reading is after the general elections are done, there is bound to be a pullback in government spending generally. And this whole PSU Capex story worries me a little bit. I think people are getting too excited about a story which simply doesn't have legs in it.
And which are the sectors that you think will be good for a power play, aka short-term plays, tactical trades?
I think that's a very difficult thing for someone from Marcellus to comment on. The short term is something we never quite understood, and tactical is a sort of oxymoron for investing, I believe. But in all seriousness, the economy overall is in solid shape. The implosion in China bodes well for India. The implosion in China will bring down commodity prices. We are a net importer of commodities. A country like us benefits from lower commodity prices. We're seeing that play out. That in turn, lower commodity prices in turn will bring down inflation. And I strongly believe we are close to the top of the rate hike cycle across the world, including in India. All of that bodes really, really well for equity investors.
Okay, Saurabh, what about your outlook then when it comes to the PSU and defense space? Do you think investors have a chance to get an LBW in PSU and defense?
So as I said, that's the theme. The broader PSU Capex theme worries me a little bit. If you see the data, I think roads, defense spending, and power in general, the government spending on these three areas has doubled in the across the last three budgets. Under India's underlying tax collections don't support this sort of heavy spending on government-driven capex. As you're alluding to, the market has got very excited about many PSU capex stories, and I think there's a real risk of overheating and overexcitement in the broader PSU capex story.
What about IT? You think IT growth will still remain under covers now?
So we've discussed this before. My view remains that the rise of AI and the rise of cloud is a windfall, for Indian IT services companies. It is very difficult now for a Fortune 500 company not to shift to cloud and AI. That should bring bucket loads of work for say a TCS, where we have a large holding. I appreciate that Accenture has reported a soft quarter, but I think the broader structural story over the next several years to come will be, as the Western companies shift to cloud and AI, its Indian companies will help them make that migration.
Before we let you go, Saurabh, do you think FIIs will make a comeback in the second innings?
The FIIs with whom we talk to, they are continuing to invest with us, and we've got good visibility that there are more FII clients who will sign up with Marcellus. And I'm not making this up. I haven't seen this degree of optimism and aggression in terms of FIIs talking to us and negotiating with us to enter the Indian market.
What about the domestic consumption play? Saurabh, is there a reverse sweep for a boundary?
Domestic consumption, mass is, I think, in trouble. Class, high income consumption is going to reverse sweep, perhaps even reverse sweep for a 6. But I think mass consumption is a struggle. We'll see that play out again in Q2.
What about the mid and small cap field? Still a good pitch there, you think?
Selectively, PSU Defense, and the PSU theme generally, I think mid and small caps seem to be overheated. But if I look at many of Marcellus's small cap holdings, they have profits have compounded at 25% over the last couple of years. Share prices have risen barely 3-4%, Aisha, suggesting that there is plenty of upside there and many of the small and mid caps that we've invested in.
All right, good to have you with us. Thanks so much for hitting it out of the park and sharing with us your views on stocks, sectors, as well as the overall market. All right.